This one indicator has just flashed green for the second time in the past 11 years for Bitcoin, historically indicating a massive generational entry point for building long-term wealth in Bitcoin. I want to show you what this metric is, why not all just one metrics obviously create the outcome that we want, but there is so much other data that is focusing on why now is a brilliant time to be entering the digital asset space and building your Bitcoin positions. And I want to share with you exactly why that is, why Bitcoin is currently down 50%, and is that something to be concerned about? Also, what is the investing framework to actually build a position here? How should you be deploying? How should you be thinking about it? Because this space is so noisy, I want to share with you my experience of investing over the past 9 years in the crypto and digital asset space to showcase to you why this is such an amazing generational opportunity in my opinion. So if we look here, the 200-week moving average is an indicator that gives us a very strong indicator of the strength and growth of Bitcoin over a period of time. So this red line here, you can see right back from where we are today, right back to the start of 2017, has only dipped below here for a 6-month period once. All right. We had a 1 weekly candle when we went below in 2020, but in 2021, we went below that level. So in early 2022, and we came out of that about a year and a half later in 2023. Now, below that 200-week moving average, we saw a generational accumulation period before Bitcoin ran from the bottom to the top over those next 3 years, up over 700%. Now, not only that, if you also allocate and oversee some of the altcoins, as we look at something like, we just look at the others market cap, which is the altcoin returns at that same time, the others market cap ran from the bottom to the top up over the same period, nearly 2,000% from the bottom to the top. So there is a huge indicator when we start to go below that period like we have now. It's been the first time since we came out of that in late 2023, about 3 years ago. And for the first time since that point, we've just broken through that 200-week moving average. You can see here. Now, why is this so important? Well, there's a few things that so many of our community members have been asking. Is this now the right time to buy? So much fear gets set into the market. You see all these headlines, and you can see some of these people like Varesh was saying, before joining Collective Shift, it was talking about, panicking with this price drop. And since seeing and working with us, it's changed his mindset about an opportunity. All right. For a lot of you may be seeing this fear and panic, seeing headlines like this, will Bitcoin fall below 50,000? Maybe you bought at higher prices and you're wondering, what is actually happening? But I want to bring you back to the point of why this has happened before and why this is actually something that you should be taking advantage of. And then I want to share with you some data points and entry plans in a second. But if you're new to crypto, I remember back historically, first time I bought a huge amount of Bitcoin was in 2018. And if we go back to the chart, back in 2018, Bitcoin, the entry point after we had this big 2017 run up, I entered the Bitcoin ecosystem in late 2017. I didn't thankfully enter on these huge run up into the later 2017, but I bought around this period here. And you'll notice that we were tracking downwards for about a year or so. When I started to buy and accumulate during this range that we're in here, it was about, $6,000, $7,000 Bitcoin. Then what happened was that this was a really boring period of time. People thought Bitcoin was dead. Price of Bitcoin went down. At this point, it was down 66%. I thought, hey, that's a pretty good entry point. Then what happened is Bitcoin went down even further. It went down another 50% after already being down 60%. All right. And what we tend to see is this final knife in the wound bounces off that 200-week moving average quite dramatically when we started to see the remove higher. Now, that feeling of when you buy Bitcoin and it goes even further can be, soul destroying. It can feel really difficult, especially when you put a lot of money in. But these winters and Bitcoin winters of this ecosystem tend to all happen around major euphoric periods that have happened previously, and then consistent negative media. All right. And it can be anything. All right. Back in 2017, we saw the end of crypto skeptics saying it will never recover. Back even earlier than that, we had Mt. Gox in 2014, which was one of the biggest crypto exchanges at the time selling Bitcoin. It got completely hacked and all of the assets basically got lost. Bitcoin went down a huge amount. We saw FTX. This was in 2021, 2022, started the collapse of not only at the FTT token, but also Bitcoin and the crypto industry at the same time. And if we look at the, previous histories of crashes, they have all ended in what we call peak fear. Peak fear tends to be when everyone's given up, everyone throws towel in for Bitcoin, calling it dead. And you can see here the Bitcoin market drawdowns. The chart basically shows you 0% on the right-hand side, right down to down 95% in bear markets. At the point in time, Bitcoin right now is only down 49%. In historic terms, this is one of the smallest corrections we've seen in Bitcoin market drawdowns, but yet the same message continues to come through. Bitcoin's dead. It's all over, wrap it up and start to go elsewhere. And that for me, from a sentiment perspective and human element, is starting to give me indicators that, hey, this is the time to be buying. And in fact, we just started accumulating more Bitcoin again 2 days ago. We open up and have a look at some of the research our team have been doing around the Bitcoin price back in 2021 and 2022. What we see is two parts accumulation. We see the first part of the capitulation is the price pain. That part is when we have a sharp sell-off, all right? Back in 2022, we had that sharp sell-off. Bitcoin dropped. If we look at the chart back in 2022, we had that first part of the price capitulation, which was this part here. Bitcoin went from top to bottom down 70%. And then we had the time capitulation, which was this continuous chopping sideways and then this final breakdown, which took about another 6 months. You'll see though, after we finished the price capitulation and the time capitulation, Bitcoin then had that huge run up over that next year and a bit, right? Up about 400%. And it even went continuously higher right up until late last year, if you count that. So what that looks like in real terms is you get the price pain first, and then the next part is the time pain. And time pain literally is people just waiting, sitting around waiting for something to happen. And that usually draws out a period of time when people absolutely give up. Now, what we have seen here is that we've gone through, in my opinion, the first part, which is the price capitulation. We saw a big sell-off from late last year into where we are in early this year. The reasons, been, well and truly documented, but we had a big liquidation event on October the 11th, which really pushed shockwaves through the system. We've got all-time high stock markets. We've got money printing going on, and there's a lot of concern around the ongoing Middle East conflict. We're seeing so much concern and mistrust within all, investing with AI, and Bitcoin is a part of that conversation. Although it's very important to remember that Bitcoin is not a stock. Bitcoin is not a revenue producing asset. It is digital gold. It is trying to become a new asset class and a new form of money, which I'll share in a second why that's very important. But what we see now is we've had that price capitulation. We are into this time capitulation, which historically has continued to become less and less from when we have the peak to regaining that peak, all right? So from the top of 2017 to the top of 2020, we went for about 3 years before we regained that same peak. In 2021, it only took 2 years. And now, in my opinion, that cycle will be shrunk even further downwards because we have had less of a sell-off. The markets are approving faster. There's more institutional investment and a range of other activities to showcase to me that I believe this period of time will go for about a year and a half, all right? And we're about halfway through that point, meaning that this accumulation range is a very, very good time to start to accumulate. Now, why is that the case? In terms of where we were below the last 200-week moving average in 2022, this period here went for about a year and a half, all right? And what we see is when you can accumulate these ranges, you start to really build out periods of time where everyone is against Bitcoin, everyone's against crypto, and that is why there's so much forced pressure and selling. Now, the real investment case, if you're still wondering if there's even conviction, why should you even buy it? Well, Bitcoin has not changed. The asset is still the same as where we were in late last year when Bitcoin was 120,000. The scarcity by design, the increasing adoption that we're seeing from ETF issuers, institutions, continues to show us that Bitcoin is the best performing asset class over the past 10 years. Bitcoin at the top here, you can see on average has returned since 2013, 628%, all right? US equities, gold, etc. have all underperformed Bitcoin. And we are seeing that in all portfolios now, just a small percentage, even 3% of Bitcoin in a broader portfolio has outperformed other portfolios that don't have any Bitcoin at all. And now what we're starting to see is huge institutional adoption from ETF issuers, public companies, countries, etc. adopting Bitcoin like we've never seen before, all right? The other part as well is what we have is the Bitcoin halving. And people always talk about the 4-year cycle. And if we look at the 4-year cycle, which is Bitcoin, what that actually means is the supply of Bitcoin, because there's only 21 million that will ever be created, halves every 4 years. So what happens is the amount of Bitcoin, let's say this is 0 Bitcoin and this is 21 million, all right? And this is back when Bitcoin was created, and this is 26. It goes like this. The supply levels off. The reason it levels off is because every 4 years, the amount of Bitcoin that comes into supply halves, all right, by 50%. So what happens is that if you think about something that shrinks every 4 years, 50%, it gets smaller and smaller and smaller. So there's already over 20 million Bitcoin already mined. There's less than 1 million left. And as we get these shrinking of supply into those halving events, you get additional benefits of the economics of Bitcoin being a scarce asset, because if there's less and less to buy and more demand, it pushes the price of Bitcoin up. So you can see the performance of Bitcoin as we lead into the halving. We are less than 2 years away now, all right? And what we've seen is that the return profile after and around the halving event tend to be very advantageous during that period of time. The only change has been this current cycle, where it has traditionally been very strong post-halving. This cycle has underperformed. My outlook and our team's outlook is the fact that we are going to see the returns of Bitcoin leading into the halving because of the restriction of demand of Bitcoin over the past 12 to 18 months due to what's going on in the macro lens. And if we look at something like our on-chain metrics, where this chart is called the Bitcoin mean reversion index, which is essentially giving us an indication of a range of different on-chain metrics that we collate and look at an index to give us a percentage indicator of a period of time where Bitcoin has been in that period historically for Bitcoin to revert higher. And you'll see here, anything below 20 in this indicator for us is showcasing a value range. And you can see every time we've been near this range historically, around that 15 level, historically meant Bitcoin has had a huge rally post the reversion period. So what that basically means is the sell pressure has exhausted. There's no more huge amount of sellers because people are done being panicked. We revert to the mean and we start to then rebuild and move higher on a traditional 6, 12, 18 month bull market. So if you align the Bitcoin mean reversion index, and you also look at, this is something that we also look at, is our CBBI index, which is essentially another indicator to give us an indication of accumulation ranges. You can see here we've now triggered into this accumulation range. The other part is the MVRV ratio, which is showcasing us basically the realized value to market value of Bitcoin. And you don't really need to understand this too heavily outside of the fact that if we go into the last 3 months, it means that here in the purple line, this is the realized price of Bitcoin, right? This is basically the realized price that people are paid on average Bitcoin for, meaning that as you go closer and closer to this line, less and less people are in profit. So if you have less and less people in profit, it tends to lead to the point of bottoming because you've got less and less people selling in profit. The only people that are selling are historically in a negative, all right? Which is, if you think about it, the amount of people that's selling in the negative would be far less than when we're in a big profitable period, all right? A euphoric period. So the same is true on the upside. When you start to get to these levels up here, like we were at late last year, all right? Historically, a period where we're heading more into more profitability, which equals more sell pressure, all right? So when it comes to where we are and why we're thinking that this is a really good time to accumulate, that indicator of the 200-week moving average also lines up with the Bitcoin halving event, the MVRV ratio, sentiment, and the fact that everyone is throwing in the towel of Bitcoin, all right? So we've actually started to buy more Bitcoin as of 2 days ago. We're starting to take some of our stable coin balance and enter into Bitcoin. The reason that this is important for you, if you're building a portfolio, all right, if we come back to chart here, if you're building a portfolio, all right, once we head into this range where you've got the, so this is the Bitcoin chart, all right, and this is the 200-week moving average, all right, and we've kind of broken below that now. Anywhere into this range is a really strong range to accumulate. So how do you do that? Well, with Bitcoin, so this is the chart, all right, oh, that's not right. Say this is the chart, and Bitcoin has crossed this level of the 200-week moving average. You want to start to accumulate into this range by dollar cost averaging. So if you've got $100,000 of capital or $200,000 of capital, this is the range where you want to be buying and accumulating every week, every month, just triggering those buys, which means you can start to get those average buy prices along the way. Now, that is a very simple strategy. What a lot of people do, or what we teach as well, is to increase those buys and the amount you're buying the further the price goes below the 200-week moving average. So as Bitcoin goes below here, the 200-week moving average, you want to be buying more Bitcoin, right? The higher percent. As we head into these higher territories, as Bitcoin starts to recover, then you back off those buys, meaning that you are building an average buy price that is lower than the market is predicted to go. And then you are basically building that stack heading into the Bitcoin halving, all right? Which means you're getting a great buy price. Now, if you bought up here, let's say you bought at the top, your average buy price is, let's say $100,000. This is also the time to be accumulating, because then you're going to lower your buy price. The ultimate game of building your Bitcoin treasury and your Bitcoin stack is to lower the buy price of how much you bought, all right? So for me, because I've been buying since, $8,000, my buy price is quite low. But for some people that only buy when the market's hot, you want to be able to lower those buy prices as we head to this 200-week moving average. So you've probably got a period here of 3-6 months as you can start to accumulate, all right? When it comes to altcoins, this is also heading into the territory where altcoins are starting to really give us a really, asymmetric upside opportunity to buy. All right. So not only there's the 200-week moving average for Bitcoin, but also you can look at things like, and now we've just taken profits on Hyperliquid. You can check out one of my latest YouTube videos I did on Hyperliquid. We've taken profits because of the amazing run that it just went on. We got pretty much near the peak here. We sold 2 days ago. And the reason we bought into Hyperliquid because it's a great on-chain business. And also a lot of the narrative has been going away into AI stocks and tokenized things and away from crypto. But Hyperliquid continues to, generate a really good return on its business. If you want to start to build in a framework of how to invest into these altcoins, you basically want to split your portfolio. If we think about it like a funnel, right? You want to build the base of your portfolio. Let's just, let's get the other way. When it comes to digital assets, you want to be able to build a portfolio that is building from the ground up. So you want to have your foundation, which is going to might be stable coins. If you don't know what stable coins are essentially a digital representation of fiat currency that allows allows you to earn more than what you're traditionally earning in the bank. So as an example, right now, there's some great stablecoin yields. This is our AI tool that we use internally, by the way, so pulling some research out here. For example, on some of these DeFi platforms, USDC on Camino, you can earn 8%. On Pendle, you can earn 13%. Different stable coins can earn you higher return depending on the platform that you're utilizing. If you're interested in some of and learning more about that, I did a YouTube video on earning an income 2 or 3 videos ago. Then you want to build your Bitcoin stack here, all right? Now remember, Bitcoin is digital gold. The reason why we own Bitcoin is because it is competing to offset the debasement of currency that is happening in real time, all right? And although the market is selling off and that volatility is there, that's a part of the game. If everyone believed Bitcoin, if everyone knew that the value that it held and the reason why it's so unique in its values and properties, well then there wouldn't be any return profile. You need to be able to learn and have an edge in an asset class that most people don't understand, because that's how you get the return profile. That's why we see a sell-off, because we see market changes like strategy selling some Bitcoin. People don't really understand it. People are heading risk off, so they start to go more protected and put some money into cash. That's why having cash on the sidelines and having stable coins available to then build our Bitcoin stack when the majority of the market is scared gives us a great entry point when you can overlay that with the data to back it, right? So that's why we build our Bitcoin stack. Then you've got what we call on-chain businesses. On-chain businesses are something like Hyperliquid that are generating real revenue and real assets on-chain. And Hyperliquid has been a huge winner for us. It continues to grow. We've added a couple more altcoins into our portfolio recently because of the, again, on-chain nature of the market. If you're interested in actually seeing our portfolio and being able to follow it along inside our membership base, we work one-on-one with clients where we build their strategy and their framework for them. I'll put a link in the description below. You can check that out and apply to join. And the top of this is where we have our more, speculative plays. All right, this is our sort of high risk, high reward, but we want to have a smaller investment into those just to ensure that we're not over allocating and taking on too much risk. We, again, have done pretty well on those more speculative plays recently as well. One of those projects was VVV, which is essentially an on-chain ChatGPT style project that we shared, and that has done really well. I think it's up about 200% since we shared that maybe 2 or 3 months ago. So even in this bear market, the reason why we're able to find these opportunities is because we have really good access to early stage DeFi markets. And 2 months ago we shared that, which must have been April, about $7.50, peaked at 21. Early stage markets, access to the native markets. Again, everything we do in the research team we have, we also allocate alongside our members. So again, you can check that out in the comments below. But the point here is I'm trying to make is when you're building this framework, this pyramid of your digital assets, the way we look at it, is a part of your overall portfolio. All right, so this is only a part of your broader portfolio, right? You might have, this might be property, right? This might be cash, and you've got your retirement or, superannuation. This might be, ETFs or whatever you own, all right? Digital assets and Bitcoin fits in a part of your broader portfolio, and that's very important. A lot of people, when they're trying to get in the space, to listen to people online that just, saying that crypto is everything, have 100% of your portfolio in here. No, it's about diversifying and about having asymmetric upside opportunities to protect your wealth and continue to grow your wealth whilst other assets continue to decline in the dollars that they are, valued in, like the Australian dollar, the US dollar, with the money printing and everything going on. So that is why the strategy is really important on the framework. That is why this indicator is such a big insight for us as to a great time to start to be accumulating and building those stacks. And ultimately, one data point will never give you everything you need, but for this indicator to trigger twice over the past 11 years, alongside this other data that we're looking at, gives us really a lot of confidence that it is a great time to start to build out and build that profile. If you have any questions, leave in the comments below. Thank you for watching. Please subscribe, and I'll see you in the next video.